not forced, of course, but it just... It was the main language in my international family. That's what I would say. That's probably the right way to explain it all. So all right. So let's start talking about market then. Hope you don't mind. Okay. So starting with Aussie, what can I say about it? Well, the price can actually continue its up movement towards the short-term target at 0.77756. No, not Ukrainian. All right, you'll be surprised, but I have roots from Poland actually. So, but I grew up in Latvia. Yes, sort of Polish. All right. Yeah, and I do have some Ukrainians as well there. Yes. All right. So talking about Aussie, well, the price is going to continue its up movement, in my opinion, because we are in up range, up market at the moment, and well, we do have sort of correction here, so it might be kind of a good idea to enter it long, well, with the limit order, or wait till retracement to this level, 0.76796, somewhere around here. Well, it might not happen, might will, I don't know, we can only expect. All right, so euro pound, what can I say about this one? The market is going up, it's obvious, as you can see. So entering long on a correction is a good idea. That's something what I'm going to do, and to decide which level to use, because I have a few here. Well, because I want to talk about kind of, well, I've developed kind of a simplified wave analysis, you know, that you can actually trade. It's not about counting waves or kind of... Sorry, kids. Do work from home during the summer. All right, so I would tell you basically that this level might be triggered today, which is 0.85670. So that's where I would try to buy it. And again, what we also can do, we can use these two levels as well. Yes, somewhere around here. So it probably won't happen until all right. Okay, so probably during the overlap session, one of these levels will be triggered, or this area at 0.8570, and then we'll be able to buy it from here. Wouldn't do anything before that. On euro pound, okay, euro dollar, just a sec. Euro dollar actually at the moment quite a good entry opportunity here. So okay, well, do have a good entry using my levels here, which is 1140. So that's something what is actually happening. So the price is possibly just going to retrace from this level here, of this level here, sorry, which is 1.11383, and then it will continue its up movement towards this short-term target, which is at 1.12226. All right, so it's 1 hour chart, by the way. So, and we can possibly buy it around this area here. Okay, so let me switch to 15-minute chart, because 15-minute candle will be closed in 2 minutes. So what do we have here? Okay, might be a good entry point in case if the price will, this 15-minute candle will be closed above this level at 1.11493, then we can actually place a limit order at 1.1146. Yeah, so placing limit order there and target 1.12263. Okay. Yes, sort of. It might happen actually. All right, pound dollar. Are you asking me now? Sorry, sharp sense. No, it's not a FIBA extension if you're asking me. All right. So what I want to tell you actually about all of this is that these are the levels that I take from CME reports, and I'm converting them into the spot market. And from now on, not now, well, actually yesterday, I've started to add, how can I say, yesterday I've started to add these forward points as well. So they're kind of weighted with volume, well, sort of option levels. Because the thing is that, well, I do have some kind of a filter for these option levels as well. So that's why I'm kind of counting, first of all, I'm counting the areas where I'm taking these levels, where I'm going to post these levels to, and then not only. So basically what I do use, I'm using few things for determining the direction of the trend, first of all, and then I look at the option levels itself. So basically, it seems like in most of the cases, all the levels I'm mentioning here are with a higher volume. But as I can see from the history, not only the levels with high volume do work, actually. So because, well, all this volume is created mostly by the retail traders. And as we all know, 90% of these retail traders do lose. So that's why basically, instead of continuation in the kind of main kind of, how can I say? So that's basically why these levels do work. So, and of course, if the volume is high, it's another kind of benefit as well. But for example, I do have a range, like here, for example, I do have like, well, it's pound dollar, and I do have 1, 2, 3, 4, 5, 6 levels here. So that I take only to trade them during the European session beginning, before the US session overlap starts. All right, so that's basically, then I will recount, like 1 hour before, I will recount all the levels and I will have the new ones. Why? Because the thing is that we actually have so many option levels there, that and volume is quite high, not only on one level or two, you know, and most of the time the highest volume possible is actually outside of our trading range, which is not useful at all, I would say. So that's why basically, well, it can be useful during the news times like NFP or something like this, you know, so then yes. But not always something what I use. So all right, so pound dollar, well, the price is going down, or cable, whatever you want to call it. The price is going down now, and we are waiting. Well, I will wait personally for this level to be triggered, and I will try to enter short from here. So the area of 1.298. Okay. Then, of course, the very first target or break-even target will be here. Don't really like how it looks actually here. It does look like a very good reversal. All right, so let's have a look at 1 week chart. What do we have there? Do we have a potential to kind of go down? Well, yes. Well, the thing is that the price is just falling down actually. So to kind of reverse, we do have a kind of we must have a good pause in this downfall, I would say. All right. On a daily chart, what do we have here? Well, no reversal patterns. So yes, it will continue its down movement towards at least this level here, 128. Then closing below, it will lead it to 125, etc. All right. Okay, so let me switch back to 1 hour chart just to have a better picture. All right. Basically, talking about volume is really good to use actually, yeah. And the thing is that why I kind of started to use this CME report to get this kind of levels, etc. Because if you know this market profile, this auction trading approach, etc., you know, so it's kind of, it's very easy to see from the chart. So you don't have actually to have you don't have to use this market profile indicator to understand how it will look and how you can actually use it. But the thing is that this, how can I say, we do have kind of a horizontal volume that shows us the volume on each bar, which is here. And we also have a vertical volume, which shows us the kind of different volume on different levels. So that's why I actually started to use these option levels. They do work quite good. And I always kind of check what kind of levels are there on the chart. So, and if, for example, one of these levels is does have lots of volume on it, you know, then I'm trying to kind of mark it up. So basically like, well, you know what, this is something where I'm expecting something break or bounce of this level or something like this. So for now, that's the picture. So the price is going to continue its down movement. And I do believe, well, we've already closed below this level here. Well, it's actually a reversal pattern. It's a spinning bottom or whatever you want to call it. It can be a hanging man, etc. You know, quite a few. And now we do have an engulfing pattern as well here. If the hour will be closed like this, or a bit higher, but not lower, you know. So, and it means that the price will continue its up movement for a bit, at least probably for a couple of hours. And then we'll see something out of it. Okay, so New Zealand. We'll stay on 1 hour chart. We'll do expect it to grow actually, and I do like what I see here. So at the moment, the price is at the support level here. And what it is, 72283. So basically when the hour will be closed, I'll see if it will be some sort of engulfing pattern or something. I will try to enter it. Again, I will split the order on two. So I will enter with a market order, and then I will place a limit order at this level, just 72283. Yeah, that's true. Okay, so I do believe that the price will just continue its up movement. Well, it can actually. Let's have a look at one-day chart just in case. What do we see there? Well, we've actually kind of triggered these highs. So that's selling, that's not buying. But again, this candle is not closed yet, and we did have a kind of bullish days before. So so for now, this candle doesn't mean anything at all. Why? Because it's not a reversal candle. It's nothing because it's not closed yet. So, well, the previous candle, well, it's kind of unconfirmed, unconfirmed reversal candle here, by the way. So as you can see, so let me make it a bit bigger. All this, as you can see here. So for now, yes, we can try to buy it with a first target around this level, these highs here, which is 0.73326. So it will be a first target. And my stop loss will be just below this level here. So we'll review my market kind of opinion at this level, at break of this level. Yes, that's very true. So what I do trade, well, I can tell you what I trade mostly. Well, sometimes I do kind of trade other pairs as well, cross rates as well. So it all depends. So, well, for example, on oil, just a second. Am I right or am I wrong? I don't know. So this is my oil position. So basically I sold it here, 652. Okay, so 42,652, sold it here, still holding to position for now. So I'm not sure is it a good idea or not, but I will possibly leave it for till the end of today. Well, I don't know, is it a good idea or not, but what I see on a daily chart here, let me show it to you. All right, we do have a very good reversal yesterday. So we had a, before yesterday, we had a reversal candle, and yesterday we had a confirmation. So what can happen today? Well, I will wait till this. Yes, on daily there is a bearish trend, as you can see. It is a bearish trend, it's obvious. And well, I'm just not sure that it's a good idea to hold on to one position. So probably what I will do, I will wait till the closure of an hour, maybe a couple of hours, you know, to see if it's a good idea to hold on to position or to kind of close it now and then sell it one more time on a reversal. All right, so I'll have a look. Not sure what is the best idea to do here. All right, so that's what I think about. All right, so let me tell you other currencies that I trade. So basically, I'm always reviewing them So I always start with them. So I've started with Aussies. That's what I trade. Euro pound, euro dollar, cable, Kiwi, Canadian, franc, yen, Mexican, gold, oil. The main ones. Then I do kind of watch euro yen, euro cat, pound yen, Aussie yen, New Zealand yen, Canadian yen, so yen currencies. So that's what I look at. Sometimes, of course, well, I do talk with other traders, and when I see that someone probably, which way do you trade? Tell us. Yeah, they are volatile, but that's good. That's something what we need. All right, it's good because, well, trading with the yen, you can always kind of get a better price. So that's what I like it. And that's what I don't like about gold. So let me switch to gold now. So for now, I'm actually, I've already bought it around this area here. So for now, I do expect so as you can see, this level has already been triggered. But what I don't like is this kind of formation. So it's actually a reversal formation here. So what might happen, and my take profit, the first take profit is just above this level here. So which is 134,740, just above it. So I will wait till this hour will be closed. And if it will be closed like this, I believe that I will just simply close my position, unfortunately. So I don't like what I see here. So what can actually happen, the price can actually go down to this level here at 1339.10, and then it will be a good idea to buy it from here. So again, do have some thoughts about it as well. So why do I think so? Why I think actually that the price can actually continue its down movement for a bit. First of all, the major kind of support, structural support is here. Well, it's not the major, but it's on our 1 hour chart. I believe that on 4 hour chart, it will be about the same. So as you can see, so this is a support. And talking about waves, well, we do have something here, but talking about cycles as well. So we do have the first wave, this one, second wave, and third wave has to trigger all these kind of lows here. So Elliott wave analysis, Glenn Neely analysis, so this neo wave analysis is very good. But to be honest, what I prefer, so my approach has been developed on Goodman, basically. Yeah. So and the thing is that it's kind of not 3-5 pattern. It's so you see, it's a reversal pattern on 4 hour chart. So waiting till the current 4 hour will be closed might be a good idea, or we can just have a bullish candle, bearish candle here as well. So you never know. What do I use? I'm not using a 5-3 pattern. So I mean, short words of saying the Elliott wave analysis. So I mean, the Elliott wave and Glenn Neely wave or Neo wave, whatever, you do have like hundreds of rules that you follow to kind of measure the waves, to name them, etc. But what I use free wave analysis. So I mean, there is always at least free wave in any direction. So for example, for now, but each wave, so the cycles has to be repeated as well. So that's something. So time-wise and price-wise. So that's what I'm thinking about always. I don't like what I see here. All right. I will talk about it. All right. That's good. That's good. Orthodox, yeah? In waves. All right. That's good. All right, so what do I see here? Well, the thing is that no matter what you use, you can use just simply kind of not a wave analysis at all. The main thing for you to do is to make profit on your account. So that's when someone is telling me that, well, I'm not doing the right thing, or someone is doing not the right thing, but at least, well, when you are making money, you are right, and that's it. So trading is not about analysis. Trading is about making money on trading, and that's it. Always remember it. Well, yeah, of course. Structure is important. All right. So, yes, I've stepped through. All right. So pound possible. Well, I'm not going to buy it here, of course. I'm looking for a selling opportunities around this level here. Already told you that. New Zealand, possibly a buying opportunity around this area. Wait till the hour will be closed. Canadian. Well, Canadian is going down. That's good. That's something I was expected yesterday. So basically, I will wait till this hour will be closed. Then something like this might happen actually. So this is a first target, very first one. Target to expect. I would call it a break-even target where you can kind of close a half of your positions. And then this is the next target. So this level here, which is 1.29004. Okay. And we'll review the market conditions after this level is broken through. All right, so this level here. Okie dokie. All right, that's my view on Canadian. So wait till the hour is closed and then I will probably just sell it. Okay, what do we have here? It's Frankie. So it does look like this level is on play at the moment. So which is 0.97561. In case if the price will be closed below it, then placing a limit order might be a good idea at this level, 9756. Just and try to sell it from here with a break-even target just here, and kind of intraday target is here. Okay. So it might go up, of course. All right. Okie dokie. So, all right, dollar yen. What do we have here? Do expect it to go down, actually. Let me check it with my I think nothing has changed here. Yeah, looking for a short entries here. So the price is going up towards this level here, and that's what I'm waiting for. So I'm waiting for this level to be triggered, and then I will try to sell it off this level here. Okay. So something like this is expected for now. All right. And control point for the market review. Okay, Mexican. So what do we see here? The price is going down. It does look like it will be closed below this level, and we might actually try to kind of split our order on two halves, and then limit order at 18.42613 and the market order at the close of the candle. Or you can just simply place a limit order. No, 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 no. No, that's not huge. I normally, well, my limit for stop losses is about 25 pips. It's the maximum what I use. But normally it's about 15. It all depends on volatility and what type of entry I use. And then, no, it's not very close. It's not close at all. If you are trading intraday, it's not close. The only thing what matters is stop loss, I would say. Yes, maximum. It's the max. And I actually don't care about entering the same position a few times, by the way, because statistics shows that it's much better than using a huge stop losses. Basically, I've never met anyone, who was using or not using stop losses at all, or used like 100, 200 pips stop losses and did show a perfect results or something like this. So never seen anyone in a long term. Well, did have kind of such an experience by myself, and well, of course, met some people who did show some sort of good results during, well, over the period of time. But in general, all these guys finally lost their accounts. So it's not a good idea. You know, the market is not always, well, the thing is that talking about risk reward ratio, if you are talking about, let's say, 50, 70 pip move, it means that not every, it doesn't matter how many pips is your stop loss. So it doesn't matter how many pips is your stop loss. The thing is that what matters is risk reward in general. What I'm saying in general is that when you actually trying to kind of take a profit on the market, well, at the end of the day, so you must think kind of your starting point always has to be from the good risk reward point on the market. So for example here, well, of course, I'm not using actually a structural stop losses because they are triggered in most of the cases. But as you can see from now, even if we'll measure how many pips, well, we do have, it's a Mexican, so it's 54 pips. So for example, for me, placing a limit order here, yeah, I will take just above 20 pips stop loss. So if I'll place a limit order here, my stop loss will be just 15 pips above. Because the thing is that stop loss area is this level, you know? So in case if the price is going to close above this level, then I'm just going to close the position by hands. I don't really care if my stop loss will be triggered or not. And the thing is that you can have, like, let's say 10, 15 pips stop losses, it will only be 150 pips, and you can actually cover it with one trade. But when you have 70 pips stop loss, and you have 10 trades, losing trades, and it can happen, I believe that you know it if you're an experienced trader, and then you have a one trade of 700 pips to cover it. You know, it's just not possible. It's not that kind of market that moves that kind of, well, I don't even know, so that sizes. I mean, if you are trading intraday, if you're looking at 1 hour, 4 hour charts, even daily charts, you know, so it all depends on this. It all depends on your approach, basically. So if you are an investor more than a trader, then of course, well, some investors don't use stop losses at all because they're not using margin trading as well. So they're not using margin. So all their trades are 1-to-1 and that's it. So, you know, it's a bit different story. Okay, let's have a look at gold. All right. That's a bit of pain. Don't like it. And oil. Yes, oil, well, we'll probably close it now. We'll wait for this hour to be closed, and then yes, of course it is. It is different story. All right. It's like buying a house with no mortgage. I mean, the market can go anywhere and your house can lose like half of its price, but if you are not paying mortgage, you don't care. You have this house and you can just wait as long as you can. So that's about the same with no matter what market. Well, if you are not using margin and, you know, so with one lot, for example, each point is losing you like, let's put it this way, 10 pounds. Or not 10 pounds, 10 euros or 10 bucks. Yeah, and the thing is that if your lot is actually 100,000, and if you have 100,000 and you are not using your margin, then can you imagine how long you can wait for your position to be profitable? So that's basically why the interest rate decisions are actually important. And that's what these kind of traders, well, investors are using. So they're kind of trading this difference between interest rates, and they kind of just holding these currencies with a high interest rate just to till the next decision, and that's what they are based on, mostly, I would say. So just the main idea, basically, main purpose. All right. So that's what it is. So basically, in the currency market, you can be an investor as well. Not probably in Forex, but futures, currencies, or something like this. Currency futures, sorry. Okay, so what I wanted to talk, well, you've started to talk about waves, and well, I've started to talk about my own approach. Okay. So what do we need to know? Well, the whole idea of this Elliott wave analysis is actually for investors, not for traders. So what he wanted to create, Mr. Elliott, good respect to him, and well, he wanted to create some kind of a vision of the market that you can use when you are investing. So when is the best time to invest? What to expect from the market next? So it's not actually a trading methodology. All right. So what he did tell by himself that he kind of made a Dow theory to work better. So something like this. So the very first one who actually, well, where are the levels on my US oil? Don't have it there. That's not good. Yeah, don't like it. All right. So basically, Elliott wave theory, it's really, really advanced Dow theory or something like this. You can call it this way. And Glenn Neely is the latest person who kind of did something about it. And he created kind of a very, very advanced and tradable approach to Elliott wave theory, and it does work. He proved his work that it does actually work because he does have a long-term hedge fund, or sort of fund, I would say, and he's the #1 fund in long-term investing for now. So that does mean something. Rector can't say anything like this about his system. All right, but it doesn't mean, well, what I use is much more simplified and much more simple than what these guys are using. So basically the main idea, if not talking about rules, again, that's not something what I like, but the main idea of the wave analysis is that, for example, if we do have a trend direction up, so we do have a reversals. So not reversals, but we do have kind of inside fluctuations during this uptrend. So we do have fluctuations like these. We do have some sort of patterns like these. Then we do have sort of triangle patterns, on the trend. Then we have kind of different kind of head and shoulders, etc. It's all about kind of analysis, wave analysis. I mean, all these triangles, not flags, I would say, but these wedges, etc. So all this in any Elliott wave trade theory book, you can actually find it. Glenn Neely is talking about almost the same patterns, etc. The only difference is that he kind of created a timing rules and what you can expect kind of rules that when you are using it, it's a bit more clear than just pointing out in the sky that we are possibly in some kind of structure, etc. And again, what makes it not worthless, but at least not stable as it seems to be, that you always have to have a B plan B. So what it means that, okay, we are in an uptrend, but what if we are wrong? So what if it's just a correctional wave of a higher degree, So that's something what you always have to have not to forget about, So that's something what's made me not to get too deep into Elliott wave counting, because it takes so much time and you cannot actually use it when you are trading kind of multiple instruments, if you are trading, let's say 10 instruments or more than that, so it's almost impossible to use the Elliott wave analysis. I mean, you can do it good. Well, during the weekend, you can prepare yourself or create a plan using Elliott wave analysis for yourself for a couple of currencies, 2-3 currencies or something like this. Well, as Jesse Livermore's told, that less is more sometimes, Yes, that's the key. Just use simply wave structures. That's what I wanted to talk to you about, actually. So just kind of brief thoughts about Elliott wave analysis kind of in its classical, approach or something like this. So what it is, we do have to see a structure, and for beginners, well, I don't have it here, but I do have a post somewhere on TradingView, by the way, about how to kind of, I do remember talking about it here as well, how you can, yes, sort of. So what can happen here? We might have some kind of correction, continuation of correction. We might have a bounce. We might use it as a down moving trend. We can use like 1 hour, 4 hour, 1 day, 2 days, 3 days, weeks analysis. I mean, charts, and yeah, it does look like a bounce, by the way, here. And we do have a very strong level here as well. Don't forget about it, 41.35. So I'm just waiting for this hour to be closed to make sure that I'm right. And then we'll just simply close the position. Okay. So when we have it, what do we need to know is that if the market is going down, it means that the price will continue. It will do at least 3 ways in one direction. It can be a structure, it can be, well, let me draw it. So again, talking about this simplified wave approach. So first of all, we must think about cycles. And what is the difference between impulse wave and a structural wave? So the main difference between these two waves is that it takes the same time or the same cycle, let's put it this way. For example, for this, this is one wave, this is another wave. So let's measure the cycle here, or whatever you want to call it. So that was the first one, and that was the second one. So that's where it finished. So which one is the correctional wave? Which one is the impulse? This one is correctional wave. This one is the impulse wave, because it took the same kind of time for this wave to go kind of, it's almost twice the pips that this wave has gone through. So that's it. That's all about speed. It's like impulse is quick, and on daily it is short. The only thing is that well, one more thing what I wanted to tell you is that I'm intraday trader, so I prefer to close the positions and open positions every day, and I'm always following the main trend, so which is daily. And that's it. Daily, sometimes weekly, monthly. It all depends where the price is and what to expect from the price. All right, so starting with a month, that's my analysis. Monthly chart, weekly chart, daily chart, 4-hour chart, 1-hour chart, 15-minute chart. That's what I use. And that's why I've created some kind of system that helps me a lot. All right, so for now, we do have, well, let's put it this way. Last 3 waves is enough. We don't hear what was before that. So again, let me switch to this poly line. All right, so first, second, third wave. And we might have a correct, so all these 3 waves, they might be a sort of impulse. So 3-wave impulse, now we are waiting for a correction. So it's obvious where is the support here. So first of all, this is like a support, and second, this is like, it does look like a support. So we do have to wait for a 3 waves correction in case if it will be a correction. So we are waiting for 3 waves toward this area. So that's the beginning of the first one till about possibly here. Then it will be the second, maybe around these areas. Again, it just, and then it will kind of reach this area. I wouldn't say this level, but this area, and I would place third wave just here. Okay, so that will be some sort of correction. It might not look like this, you know, it can be a very noisy area or something like this, but that's basically what we are waiting for. I'm waiting for it, and that's where I'm going to sell it. Try to sell it. So that's why basically I do feel myself confident for now to close it, because as you can see the price, well, the whole hour the price is going up, and well, you saw it as well, that it might be just a reversal. So that's it. So basically, instead of using 5 and 3 waves and all these different kind of things, well, how these 3 waves can actually happen. So we can have something like this. Is it 3 waves? Yes, that's 3 waves. It also can be a channel or whatever, or flat formation, you know, or whatever. We can have a triangle, which is 3 waves as well. It can be 5 waves in triangle. So first, so something like this can happen, you know. So instead of using this approach of 5 waves, 1, 2, 3, 4, 5, with all the Elliott wave rules, and then 3 waves of 1, 2, 3. All right. this correctional thing, I'm just using simply 3 wave structure. So I do believe that there is always at least 3 waves in one direction, no matter what it is, it's a triangle or whatever. It does help if you know all these figures. So, but you don't have to draw them all the time if you do understand the basically the main kind of. Yes, of course, there will be a short entry possibility around this area. That's what I'm waiting for. All right. It was actually a good idea to close just at the closing of this candle here. It was a good idea to just simply close the position. Well, I didn't do it, so what can I say? All right. I don't like it when it happens like this. All right, so what I do use, I'm using 3 waves approach. So we have 3 impulse wave, at least, and then we have correctional wave. All right. So we just have to practice a lot, you know, to find out how to use them, these waves, etc. I do have the kind of the whole approach written for myself, you know, how I'm using them. I do have some rules. Most of the rules are from kind of mixed from Glenn Neely using the cycles and Elliott wave analysis using the main rules price-wise, you know, so these highs and lows that must not be triggered, etc. You know, so and that's it. So why these waves are happening actually? So what I wanted to talk to you about, just a very quick one. It will be quick. So it's all about supply and demand, no matter what kind of analysis you use. Because what I don't like in most of the Elliotticians, not most of the Elliotticians, I believe that the pro ones, they do actually understand what it's all about. And what actually Mr. Elliott did write in the very, very kind of beginning of kind of his book, etc. So it's not about the psychology. It's all about how market participants are using the levels, what we have structural levels, you know, on the market. So placing all the structural stop loss and entries, etc. You know, and that's the first thing. And the second thing is that how other market participants who's got a bigger accounts are using the same data. And it's all about who wins, you know, it's all about who wins. So that's something what you always have to remember. So where the volume is, here. Where the market will go, towards here. Well, now it's around this area. Why? Because I'm sure that we have lots of sell limit orders around this area somewhere, you know, and that's why market is going up at the moment. So that's it, guys. So finished my kind of webinar for now. So we'll talk to you. Yes, of course. That's very true. That's very true. So you don't have to kind of make it so much harder, you know, so don't do it. Life is easy. It has to be easy. All right, guys. Have a good one. Have a great day. Have a great kind of trading today. Bye-bye.